So itemizing versus a standard deduction. So the standard deduction is what we automatically, for the most part, take. But sometimes your itemized receipts may actually be the better way to go. This is where it's important to keep track of receipts and documentation, especially if you're a small business owner, because sometimes this is actually going to come into more play there. Or if you do a lot of spending, and sometimes there's other things that can come into play. And this is where you see everybody that says all the receipts. Is to actually go into some of this. So the standard deduction is saying, okay, we guess that you have done all these things and it's going to run you about this amount. So the things that you can itemize, you want to take the higher of the two. I'm sorry, I forgot to go over that part. And the things that you can itemize, if you have a whole lot of medical or dental expenses that year, property taxes, the interest on your mortgage, gifts to charity, and losses from federally declared emergencies. And so the standard deduction for 2022, and this changes every year, is $12,950, and for a married taxpayer is filing jointly with their spouse is $25,900. This number is always written on your 1040 form. It'll be on the left-hand side when you're looking at that area for the standard deduction. They'll actually tell you the numbers that you can use. So it's not something you have to look up elsewhere. They make it to where it's really easy for you to find. But let's say you think that there may be a chance that you can get more than that. Like I said, especially years that you have high medical expenses, it might be worth looking into. And so we calculate their itemized deduction using the form called Schedule A. They used to keep this all on your 1040 and made the 1040 really long. So what they done now is kind of move these off onto different forms when people that don't typically, because this is not stuff that everybody does. And so we're going to go through the Schedule A. Up at the top, you'll end up writing Romeo and Juliet Montague, along with his social security number. Then you will take and look at, and if you look at page 3, it tells you what things they had. And they had a medical expenses of $2,500. So you're going to write that in line 1. In line 2, you would have done some stuff on the 1040, but we haven't done that yet. So we're just going to use a number that will be in that same spot. And so we're going to add together their line 1, their wages and tips and other compensation for both of them. So that's that $26,474.19 and the $45,789.63. And you're going to put that in line 2.
Can you repeat that?
And so you should be at this point have Romeo and Juliet, Romeo Montague and Juliet Capulet.
Teacher's present generation. I need all.
Now, what does it say to do in box for line 3? So we're going to take $72,263.82 and multiply it by 0.075. And when you do that, you come up with $5,419.79. These forms from the IRS are a big process of, do you remember Usually it's sometime in late elementary, junior high, you get a test. They pass it out to everybody. And it says, like, read all instructions first before doing this. And you read through everything and you do everything and it says at the end, now put your name on the top and not do any of the instructions. It's just about you having to read and follow instructions. That's basically the IRS forms. For the most part, it's read and follow instructions. Everything is step by step. There's a couple of things that are really complicated, and that's where you want to make sure you want to get a accountant involved. But if you look at line 4, it says subtract line 3 from line 1. But if line 3 is more than 1, so who's bigger, line 3 or 1 in our scenario? Line 3. Then what does it say to write? 0. So that's all you have to write is 0 in line 4. Basically, if line 1 is bigger, then you subtract going down. If line 2 is bigger, or line 3 is bigger, then you write a 0. We're not going to write a negative number. Usually they'll get you to write a 0 instead of a negative number. Now, let's figure out what taxes have we paid. And now, does Texas have a state income tax? So, in most states, you take their state and local income taxes, or you can take the general sales tax. You can't take both. Well, in Texas, we don't have income taxes to worry about. So, this is where people will save all the receipts, add together all the taxes they paid throughout the entire year, and then write that here. A lot of work, which is the reason most people take the standard. If you spend enough money, it probably is more beneficial for you to itemize. But the process of keeping every single receipt of everything you spent throughout the entire year and finding all your sales taxes and adding them all together is challenging. Now, in other states, a lot of times people will take and go, okay, let's just add together what income taxes we paid. So let's do that for Romeo and Juliet. They have paid into income tax for their state, they didn't have any local, $459.45 for Romeo and $589.21 for Juliet. So we add those two numbers together and you come up with $1,048.66. Then real estate tax is next. Buying and selling houses, there's taxes on the real estate. That one you need to follow the instructions on. There are some instructions that are separate. If there's too much to write in that one line, they have a separate set of instructions. But we didn't have anything that told us that we bought our solar property that had taxes on it. And so next we have the state and local personal property taxes. This is not your business property taxes, but this is your local personal property. And it says that their property tax was $1,200. Now, this is the part where owning your house gets you a little bit of a benefit versus renting. You're paying property tax when you're renting. It just isn't a separate item. It's built into your rent. And so you never get to itemize that deduction. What does line D ask you to do? Add them together. So that's $2,248.66. Now, they cap how much you can take here at $10,000. Having spent more than $10,000 so far? Is line 5D bigger than 10,000? No. So we only get to take what's in line D, 5D. And so that's 2,000. And line 5E, you'll write $2,248.66. So when we add those together, when we write that down on lines 6, it asks us for any other taxes and lists the amount. And there's a list of taxes that you can write there. Just look it up in the Schedule A, and it'll tell you other ones. Add together 6 and that 5E. And since we didn't have anything in 6, it's just that $2,248.66. You'll find out when you're doing your taxes with as simple as what you mostly do, you're going to end up writing the same number frequently. It's often rewrite what you just wrote or add two things together and write it down. So it's a doing your taxes is a detail-oriented, follow instructions. Arithmetic is not hard. You need to be able to multiply by percent and add or subtract. So now let's go down to the next section. The next section is the interest you have paid. So home mortgage interest or points that you did not use all of your home mortgage loans to buy, build, or improve your house. You need to follow some other instructions. So basically, if you have more home mortgage loans, like you refinanced and put in, and it was just to consolidate your debt, it may not fall into here. So you have to follow the instructions and you check that box. A says home mortgage interest and points reported on your form 1099 or 1098. This will come to you from your mortgage broker, just like you get your W-2. And so the mortgage interest is $1,782. And so you write that in line 8A. And then any interest that you did not have reported on your 1098, you have to tell who you paid the person you bought the home from. So like say if you're doing a for sale by owner and owner financed. This is where you'd report that. And any points that are not on it that could also go through owner financed will also be done there as well. You will see when you're doing your 1040 or other forms, you'll have a lines and it'll say reserved for future use. Basically, they don't want to reinvent the wheel every year. And so they think they might end up adding something to this in the future. They leave a blank for themselves to add more to it. And that way they don't have to recount and redo all the lettering and redo everything else. Line E, 8E, says add the previous three lines. Well, we only had that one number, 1782, so you write 1782 again. And then 9 says any investment interest, you have to do another form for it. But if you have any investment interest that you might have, that you can take off here. So like if you are doing, you can do borrow money to invest, and some of that will have interest in it, and that will come up here where you can do it. add lines 8E and 9, and write in line 10. So basically, if you'll notice that there's basically two columns that you're really working with. You have your working column where what's going on in that section, and then you have like a output number from that section. And what we're doing is we're finally getting it to where we have an output. Line 10 is an output number. Line 7 is an output number. The next section is about our gifts to charity. And then, so you're going to take and look and see gifts by cash or check. If you made a gift of $250 or more, you want to follow the instructions. And then any other than cash or check, if you made a gift of more than $250 or more, see instructions. And that's talking about at the same time. And so what you're going to be doing is 11 would be like your tithe, where you're giving into the church. Or if you did like the St. Angela Gives. So then you could report there. Line 12 is about your things like you donated, you cleaned out your house and you had all this stuff and you donated it to charity. So that's the difference between the two. And so if you ever go to Goodwill or Salvation Army or Christians in Action, they'll ask you, do you want a receipt of your items?
Say yes.
If you think you might itemize, say yes. It's beneficial if you itemize. But that's really the purpose of that. And so if you're not itemizing, it's not really worth keeping it. And the gifts by cash or check, we did 1,200. And then the gifts of items to Goodwill was 2,370. Again, it's so important to hold on to receipts. We're going to add those three lines together and you get 3,570. And so we've gone through now, and everything that he's listed as possible deductions we've already included. There are still two other sections. The next section is about casualty and theft, causality and theft or losses and theft losses. And that's from a federally declared disaster. And it says other than the net qualified disaster losses. And then you'll have to attach a form and get it put there. And then if you have other itemized deductions that you can take from the list of instructions, there's a list of instructions for filling out a Schedule A. And you can type the amounts and total it up and put it over in line 16. We don't have anything that follows there. And so what we're going to do is in line 17, we're going to add up that column. Not going into the other one, but just that total outputs. So you're going to add together those three numbers that we have. You're going to add together line 7, line 10, and line 14. And you come up with, so when we add those together, you come up with $7,666. So that is their itemized deductions.